Have you ever wondered why Charlie Munger, one of the smartest investors of all time, once said that 500,000 is all you really need? Well, today I'm going to break down exactly what he meant and how this single idea can completely change the way you approach wealth, investing, and financial freedom. Hey everyone, welcome back to the channel. If you're new here, I'm your trading friend and guide, here to help you cut through the confusion and learn how money, markets, and investing really work step by step. No fluff, no complicated jargon, just real insights you can apply immediately. Now, before we dive in, let me tell you something important. Charlie Munger wasn't talking about winning the lottery or taking crazy risks to hit 500,000. Not at all. What he meant goes much deeper, and understanding this idea can save you years of financial frustration. Because most people think they need millions to retire, millions to start investing, millions to feel secure. And that belief keeps them stuck. It makes them delay investing. It makes them panic. It makes them take unnecessary risks. And worst of all, it stops them from ever building real wealth. But Munger's philosophy flips that thinking upside down. So in today's video, we're going to unpack why Munger believed 500,000 is the magic threshold, how this one number changes your entire financial future, what beginners can learn from this approach, and the simple, practical steps you can start taking today to move toward it. By the end of this video, you will have a clear roadmap, not just for trading or investing, but for building wealth the way Charlie Munger did. Slow, steady, smart, and predictable. Because here's the truth, you don't need extraordinary intelligence. You don't need huge capital. You don't need luck or connections. You need understanding. You need consistency. And you need a strategy that works in the real world. And that's where this video begins. So stay with me, because what you're about to learn may become the most important mindset shift you ever make in your investing journey. Let's get into it. Most beginners believe that becoming wealthy requires huge amounts of money. And honestly, it's not their fault. Everywhere you look, social media, news, even friends and family, people talk as if you need millions before you can even start thinking about retirement, investing, or financial freedom. And this belief creates one big problem. It stops people from taking action. Think about it. If you think you need 100 million or $2 a million or some unrealistic number just to start building wealth, what happens? You delay, you hesitate, you give up before you even begin. You say things like, I'll start investing when I earn more. I need a bigger salary first. It's impossible for an average person to build wealth. Trading is only for people with huge capital. Investing is pointless unless I have a lot of money. And these beliefs trap beginners for years. Charlie Munger understood this psychological trap very well. He knew most people fail at investing not because they're stupid, but because their expectations are unrealistic. They think the mountain is too big to climb, so they never take the first step. But that's not the only pain point. Another big struggle beginners face is this: they underestimate the power of compounding. Compounding is simply earning returns on top of your previous returns. But because the results are slow at first, most people ignore it. For example, if you invest 5,000 and it grows 10% in a year, that's just 500. And many beginners think, that's nothing, how will I ever get rich with that? But what they don't see is what happens over 30 years. They don't see how consistency transforms small amounts into big numbers. This mindset leads them to chase shortcuts. High risk trades get rich, quick schemes, hype stocks, meme coins, random tips, emotional decisions, and when these blow up, as they usually do, they feel discouraged and quit. Another major pain point is lack of patience. Most beginners want results now. They want overnight success. They want to grow small capital instantly. But Charlie Munger's message of 500,000 is all you need teaches us the opposite. He believed that once you hit a certain level, this threshold, compounding becomes incredibly powerful. It begins to snowball. Your money starts working harder than you do. But beginners don't reach that stage because they quit too early. They think the early stages are pointless. They think slow growth means no progress. They never give compounding enough time to work. And finally, there's the emotional struggle. Money is emotional. Trading is emotional. Investing is emotional. Beginners often feel fear of losing money, fear of starting small, fear of not knowing enough, fear of making mistakes, fear of volatility. These fears paralyze decision making. But Charlie Munger's philosophy removes that fear because it focuses on long-term, simple, predictable wealth building where you don't need to be a genius, you don't need to gamble, and you don't need massive capital to begin. In this video, we're going to break down exactly why that 500,000 number matters, why it becomes a turning point, and how a beginner with even small savings can realistically move toward it. Because when you understand the pain points and how to avoid them, you begin to see wealth building not as a fantasy, but as a practical step-by-step journey. To understand what Charlie Munger meant when he said 500,000 is all you need, we first need to break down the logic behind this number. Because it's not random, it's not motivational fluff, it's grounded in mathematics, compounding, and decades of real-world investing experience. So let's walk through this step by step in a simple beginner-friendly way. 1. The power of the first 100,000. Munger always said the first 100,000 is abuse, but you gotta do it. So why? Because this is the stage where you're fighting against your own emotions, your spending habits, your discipline, and the slowest part of compounding. When your capital is small, returns look tiny. A $10 return on 100, a 10% return on 10,000, thus a 10% return on 100,000, 10,000. This is why most beginners quit early. They feel like the game isn't moving. But the truth is, this is the part where your discipline matters more than your returns. The goal of the first stage is simple: build the foundation. Build the habit, build the discipline. 2. Why 500,000 is the turning point? No, here's the key idea: 80, 500,000, the game changes. Why? Because compounding becomes visibly powerful. Let me show you. If you have 500,000 and earn just 5% per year, to a 25.7% per year, 135,000% per year, no 50,000 without doing anything, no overtime, no extra freelancing, no extra hours at work, your money earns more than many salaries. And at this stage, you're no longer building wealth, your wealth is building itself. This is the moment Munger was pointing toward. This is the moment where financial freedom becomes predictable, not just possible. 3. The psychology behind the number. You might ask, why not 1 million? Why not 2 million? Good question. Because 500,000 is realistic for an average disciplined person, achievable through long-term investing, large enough for compounding to become powerful. The point where wealth becomes self-sustaining. Munger didn't choose a number to impress people. He chose a number that anyone with consistency could hit over 20 or 30 years. Most people fail because they think the goal is too far. But 500,000, suddenly the mountain feels climbable. 4. The math behind growth. Let's break it down in simple terms. If you invest consistently, avoid big losses, use a simple long-term strategy, let compounding run, you can realistically grow into that 500,000 range. For example, 500,000 at 10% annually becomes 91,000 20 years, in 566,000 in 30 years. Investing 1,000 a month at a 10% annually becomes 32,000 in 20 years, over 130,000 in 30 years. This is not magic, this is math, this is compounding. This is Munger's point. 5. The strategy behind the number. Munger's philosophy is simple: get your capital to a level where compounding takes over. And how do you get there? You follow a simple, boring set of rules. Don't lose big. Don't chase hype. Don't overtrade. Don't try to get rich instantly. Don't interrupt compounding. Stay invested longer than most people are willing to. He believed that average people fail because they try to be extraordinary. But real wealth comes from being consistent, patient, disciplined, long-term focused. That's why 500,000 is such an important milestone. It's where ordinary people start experiencing extraordinary results. Now let's bring Charlie Munger's philosophy to life with a simple, real-world example. Because theory is great. But when you see the numbers, you truly understand why 500,000 is such a powerful milestone. Imagine a beginner investor named Ali. Ali is 25 years old, works a normal job, and has no rich family, no special connections, and no massive savings. He's just an average person like millions of others. But Ali makes one important decision early in life. He decides to invest consistently even if he starts small. Let's see how his journey unfolds step by step. Step 1. The slow beginning. Ali starts investing $300 per month into simple, long-term assets, a broad stock index fund, a few high-quality companies, maybe even some small positions in ETFs. He is not chasing hype. He is not trying to time the market. He is not taking extreme risks. He simply invests patiently, month after month. In the first 5 years, his progress seems slow. Year 1 total around $3,600, year 2 total around $7,500, year 3 total around $11,700, and even with decent returns, the growth feels small. This is the part most beginners hate. This is where 90% of people quit. But Ali remembers Charlie Munger's words. The first $100,000 is the hardest, so he keeps going. Step 2, I'm approaching the first $100,000 by age 35 after a decade of consistent investing. Ali finally crosses the first $100,000 mark, and this changes the game. Why? Because now his annual returns start becoming meaningful. At 10% average growth, he is a $100,000 earns a $10,000 per year, $85,000 per year, and about $33 per month, or the $27 per day without him doing anything. For the first time in his life, Ali sees the power of compounding. He realizes his money is starting to work harder than he expected, and this motivates him even more. Step 3. Building toward $500,000. Ali continues investing the same $300 per month, but now compounding does the heavy lifting. Watch the progression. At age 40, the portfolio the $200,000. At age 45, portfolio load $350,000. At age 48 or 49, the portfolio passes $500,000. This is the exact moment Charlie Munger was talking about. The $500,000 is not a random number. It's the point where wealth becomes self-sustaining. Let's break this down. If Ali earns $550,000 per year, 7% annually, get $35,000 per year, 10% annually, get to $50,000 per year. Think about that. Even at the lowest return percent, his investments pay him more than a full-time minimum wage job in many countries. At 10%, his portfolio earns $4,000 per month completely passively. Ali doesn't need to take big risks. He doesn't need to guess market bottoms or tops. He doesn't need a huge salary. He simply reached the point where capital side time cost compounding, freedom STP4, the wealth snowball effect. Once Ali hits $500,000, the growth accelerates dramatically. Even if he stops contributing completely, his portfolio could grow like this. 1,000, 2,000, 1,000, 500 in 7 years, from $500,000 to 1,000 in 10 years, from 500,000 to 1,000, 300,000 earners, and 10 years, all without adding a single extra dollar. And this is why Charlie Munger taught that reaching $500,000 is a life-changing milestone. It's the point where your money becomes more productive than you. Final lesson from this example: Ali wasn't rich. He didn't start with a big inheritance. He didn't gamble on risky assets. He didn't get lucky. He simply followed the exact path Munger described. Start small, stay consistent, avoid mistakes, let compounding do the heavy lifting, and before he knows it, he has a level of wealth that most people believe is impossible. But it wasn't impossible, it was mathematical. Now that we've broken down Munger's philosophy, explored the logic behind the $500,000 milestone, and walked through a real life example, let's simplify everything into clear, actionable takeaways. These are the principles you can apply immediately, whether you're a beginner, intermediate, or even someone returning to investing after years away. Because Charlie Munger's ideas are timeless. They work in any market, any economy, and for any individual willing to stay disciplined. Let's dive in. Takeaway: he once seen start early, start small, but start consistently. The biggest mistake beginners make is waiting for the perfect time to invest. They wait for a salary increase. They wait for the market to cool down. They wait for more knowledge. They wait for confidence. And that waiting costs them years of compounding. Here's the truth: you don't need a lot to start. You just need to start. If you can invest $50 per month, start on $100 per month, start $300 per month, start. The amount matters less than the habit, because habits compound even faster than money. Just like our example with Ali, what you do consistently becomes more important than what you do occasionally. Takeaway A. Tuli. Focus on avoiding big mistakes, not chasing big wins. Charlie Munger and Warren Buffett both agree on one thing: avoiding stupidity is easier than seeking brilliance. In other words, you don't need to be a genius to win. You just need to avoid common traps that destroy wealth. Here are the mistakes you should stay far away from: overtrading, chasing hype or trending stocks, high leverage, trading based on emotions, panic selling during volatility, listening to random tips, jumping from one strategy to another, trying to get rich quickly. If you simply avoid these traps, you are already ahead of 80% of beginners. Most people lose money not because the market is against them, but because they are against themselves. Your goal is not to be perfect, it's to be consistent. Takeaway 83: understand compounding and respect time. Compounding is like gravity, it works quietly, slowly, and predictably. But the problem is most people quit before it becomes powerful. The early years feel slow. The numbers look small. Progress feels invisible. But here's the secret: the magic of compounding only appears after years of patience. That's why Munger always emphasized long-term thinking, because the longer you stay invested, the faster your growth accelerates. Here's a simple rule: if your time horizon is less than 10 years, you're not investing, you're speculating. Stay long, stay patient, stay invested. Takeaway 14: reach the compounding threshold. Your personal $500 now, your personal target might not be exactly $500. It may be $300 or $700, depending on your lifestyle, country, and goals. But the principle remains the same. There is a point where your money starts working harder than you do. That is the turning point. That is your financial freedom threshold. And your job is simple. Get there, steadily protect your capital, let compounding take over. Once you cross this milestone, everything becomes easier. Growth becomes automatic. Your wealth snowballs. This is the entire foundation of Munger's philosophy. Final advice before we move on: you don't need extraordinary intelligence. You don't need an MBA. You don't need to time the market or predict the economy. You need a long-term mindset, a consistent investing habit, a focus on avoiding bad decisions, a willingness to stay patient, and the understanding that wealth grows silently. If you follow these principles, you will build long-term wealth, even with an average income. Charlie Munger made wealth building simple. Your job now is to make it consistent. So now you understand exactly what Charlie Munger meant when he said $500 is all you need. It's not about being rich. It's not about chasing millions. It's about reaching the point where compounding becomes your partner, your engine, your silent worker that never sleeps, never complains, and never stops growing your wealth. And if you've watched this far, then you're already different from most people. You're serious about learning, you're willing to think long term, and you're ready to take control of your financial future. But here's the thing: education is only the first step. Now it's time to apply it. So if you found this video helpful, here's what I want you to do. Aki. This video, why? Because when you like the video, YouTube pushes it out to more people. And that helps others learn the same powerful lesson that could change their financial life. It also tells me that you enjoy content about building long-term wealth, compounding, and real practical investing. 2. Subscribe to the channel. If you want more videos like this, simple, practical, beginner-friendly lessons on trading, investing, wealth building, and financial psychology, then make sure you hit that subscribe button, because every week I share step-by-step trading guides, beginner investing lessons, market breakdowns, wealth building habits, mindset and risk management strategies, and deep explanations of famous investor principles. In short, everything you need to grow as an investor without the confusion and noise. And trust me, the journey becomes much easier when you learn consistently. 3. Comment below one thing. What is your compounding milestone goal? Is it a 100,000 or 300,000 or 500,000 or even $1 million? Drop your answer in the comments. Why? Because publicly committing makes you more disciplined, more consistent, and more serious about your journey. And I personally read every comment. I want to see where you are on your path and help you stay focused. Your comment might even inspire someone else watching this video to start their investing journey today. Final words before you go. If there's one thing I want you to take away from this video, it's this. You don't need to be a genius to build wealth. You just need the right strategy and the patience to follow it. Charlie Munger proved that ordinary people can achieve extraordinary results with long-term thinking, discipline, and consistency. Whether you're starting with 50 or 500 or $5 or 1,000, whether you're 18, 25, 35, or even 55, whether you're scared to begin or unsure where to start, the best time to build your future is Nobu. Don't underestimate what you can achieve in 10 or 20 years with steady investing. Don't let impatience steal your financial freedom. And don't let small beginnings stop you from reaching big milestones. Your journey to financial independence has already started just by watching this video. Now take the next step, commit. Plan, invest, stay consistent, and let compounding do the rest. Thank you for watching, and I'll see you in the next video. Until then, stay disciplined, stay patient, and keep growing.